Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 52, NASDAQ up 17, S&Ps are up 4.5. Gold contract up $5.90, trading at $1,284 an ounce. Silver up 4 cents at $19.47 an ounce. Platinum down 1 at $4.17 an ounce. Light sweet crude up 55 cents at $93.90 a barrel. Bonds, we have the 10-year up 2 at 126 flat. 30-year down 6 at 140.17. Both of them refuse to back off, folks. King dollar up 87 ticks at 82.68. The euro's down 19 at 131.73, and the yen is trading at 104.09. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay. We have hit 2005.04. Yesterday was the lightest day of volume in the market for the year. Guess what? Today's going to be lighter. What does that set up? That sets up we're going to have a light week. And benchmark-wise, this is what you're looking at. The cash S&P, you have two separate benchmarks. Your first benchmark is from the high of last week, which is 1994.76. This will be for the close on Friday. So 1994.26. That says, okay, can't handle that price. A larger benchmark is the swing point that was taken out on the 20th of August. That benchmark is 1991.39. The volume is going to be anemic, no doubt. Today, I suspect at the end of this week, same deal here. Why? Well, this is the second day with tremendously lighter volume, and what we will have is that Friday, I expect Friday, folks, is going to be just the lowest day of the year, more than likely, thus far. We'll see what happens around Thanksgiving, but thus far, I'm talking a full day of trading, this is. The SPY, the SPY, we did 63 million shares yesterday. You're at 33 today. So bottom line, that's going to be dramatically lighter also. The swing point that we were dealing with up here had volume of 56 million. You got into that with the 72 million after coming downtown with 183 million. NASDAQ Composite, same set. Well, here, let's go look at the NYSE right now for a second. So the NYSE, as we're speaking here at 10 past, is 317 million. Which is saying it'll come in about 490 again. The NASDAQ Composite is at 1 billion right now. That's saying it's going to come in about 1.3 billion, 1.4. The composite itself, we are up 16 bucks here at 45.73. You know, that baby, higher price, you can go higher. The NDX 100, what you have inside that 100 is that is dying on the vine. Right now you're at 15 million. Yesterday you were at 24 million. Gold. Now, it's going to get interesting here is this. What we had with gold out here today is this. Gold got back inside the range, a higher range that is, had some juice behind the move. The higher range that we're talking about is 1281 flat on this contract. We went this morning from 1275 to 1291. You've done 95,000 contracts, which is not bad. You know, I'd like to see about 120, 130. Bottom line, it's holding price up here. What does that set up? That sets up a run, can't bust it down. You're going to bust it up. That sets up to run to 1347. Silver hasn't made it yet, okay? If we go over and we take a look at silver, silver has some work to do out here. SIZ. So the silver contract and your benchmark inside both of these contracts, folks, is June 19th. In fact, June 19th is the benchmark in all the gold and silver equities. That's when we had wide price spread, accelerated volume. You take a look at the silver contract, high volatility out here today, did 31,000 contracts, which, by the way, contract-wise, I love it. I love what we did. You had some juice into it. It couldn't hold price, but when you get to a good high, which is, in this particular case, 1973, you backed off, and we had some volume behind the move, you get a start happening. Silver has to get back inside 1994, which is going to take some juice, folks. But it had a start out here today. Bonds. We're going to take a look at the bond market. What we have with bonds, bonds just refuse to back off. Bonds are just going to be, they're powerful. The 10-year has done 1.7 million contracts out here today. Sideways move, slightly higher, but really a sideways move. 30-year bond market, 30-year bond, that has done 364,000 contracts, and it just won't back off. Here at 140 on the 30-year, that wants to go to 142. You're at 126, and a 10-year, that wants to get into a price point of 128. King dollar. Let's go take a look at King dollar. Okay, now this is where it's going to get really intriguing. So, King dollar today has a low of 82.48, a high of 82.73. We do 15,000 contracts, okay? All in all, King dollar's made a nice run. It looks to me at this particular point that King dollar's going to take a rest. Now, this is going to get really intriguing. Why? Because if you look at a smaller ABC structure, it finished that smaller ABC structure. That's what it comes down to, okay? The larger structure, so when you finish an ABC structure, whether it's up or down, you do something other than you continual go on the side that it was going on, meaning you do an ABC structure on the way up, you're going to pull back, you're going to go sideways, you're going to do something other than continue to go up. When you finish an ABC structure on the way down, it's the same deal. That's in the short term. Now, on the longer term, what you have, I suspect, in the dollar is it's on a much larger ABC structure. So we'll see at this particular point, will the dollar index move sideways to build cause to make its next move? And if that's the case, which it's still a close call here, but if that's the case, what we're going to see is you're going to see gold move, and you're going to see the gold equities move. Right now, what we'll have with the gold equities is this. If you look at the XAU and the HUI, they almost made their swing lows yesterday, yet they didn't. That's positive. They come off those lows today with some juice behind the move. I won't get the volume till tonight, but with some juice behind the move. There is still some divergence inside that equity market, but I finished the gold report this morning. We sent it out. If you don't get the gold report, folks, you can test drive it 30 days absolutely free by coming over to our website. I like the look of these equities right now. They were teetering last week in a huge way. They were all in decent shape the last 3 or 4 weeks. But on that pullback, bottom line is that if they couldn't hold June 19th low, that would have been a problem. Well, they held it. They held it. They got some action. We had some volatility out here today. And the way that the dollar actually traded out here today is basically telling me it's going to take a little break, which would make sense, by the way. The dollar has just gone straight up from 80.02 or at 82.67. That doesn't seem like a lot, but that's a lot, folks. So I'm not looking for a huge pullback in the dollar, but all the dollar has to do is go sideways in order to give the metal market a little breathing room. 877-927-6648, some of the high-volume stocks in our low-volume market out here. You get Best Buy down 211. They're having some problems. The Intel is, Intel is up 2. You got Micron Technology down 29. You got Microsoft off 11. We'll take a look at a few of the Dow stocks out here. You get ExxonMobil's up $1. We get Disney down 35. Oxy's up 2 cents, that is. Big Blue is up $2.17. Let's go over and take a look at Big Blue, because Big Blue, I suspect, no doubt, is holding the Dow Industrials up. Big Blue, no juice behind the move. We do 1.9 million shares versus 4.2 in the way down. If we do take a look at the Dow Industrials as to what's putting juice inside the Dow Industrials, you have, Big Blue is putting 13 points into it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. We have the Dow Industrials right now up 49. Nasdaq's up 17. S&Ps are up 4. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 47, NASDAQ up 16, S&P's up 3.5. Let's go over to our man, Mr. Andy Hecht. And don't forget, folks, right here at TFNN, every Tuesday, Thursday, 5 to 6 o'clock, right after my show tonight, Andy's going to have an outstanding show for you. He also has a great newsletter. It's the Technomental Commodity Report. You can get that by coming over to our website at TFNN. Go to newsletters. Go to Trading Newsletters. You can test drive that report right here, right now, absolutely free for 2 weeks. Andy Hecht, what's going on?
How you doing, Tom?
I'm doing great, man.
Good, good. Yeah,
So,
everything's good. Everything's good. Quiet quiet, low-volume week coming into Labor Day weekend. Happy Labor Day weekend and end of summer. Doesn't it feel like it just flew by?
It absolutely did, man. There's no doubt that it flew by. I mean,
it flew by, man, and the crops are growing and grain prices are going lower and the world is wonderful. You know, Tom, I wanted to talk to you today. I wanted to take we usually talk very specifically about movements in specific commodities.
Yep.
And I wanted to take more of a view from 30,000 feet.
Okay.
Just kind of a more macro, because I've been noodling this over, and I sent you a piece that I wrote over the weekend. And
I know.
Actually,
the folks can Google the piece, folks. If you Google Andy Heck. Okay, and what should they put in next? Should they put
it's on Seeking Alpha.
Okay, so Andy Hecht and folks, okay, HECHT. Okay,
that's it.
That's a beautiful thing, baby.
and I'll put up the link in the den after after I'm on with you.
Yeah.
But what I've seen is, look, we all know grain prices have tanked. And why have they tanked? They've tanked because the weather's good and the crops are growing well. Okay, that makes sense. Now, oil prices have gone down.
Yeah.
You know? They've gone down pretty sharply, and a lot of specs got long because of what was going on in the Middle East, what's going on with Russia, all that stuff. But kind of a counterintuitive move to some. Others it makes perfect sense because there's a lot of supply around. But I noticed something else, and I'm going to put up a little chart here.
Okay.
A multicolored chart, and it's a long-term chart, folks. It's a monthly chart.
Okay.
So what it is. What I'm showing here is, in black on the chart, is a representation of the Canadian dollar.
Okay.
And what's in blue, I'm colorblind, so I might be screwing this up.
Yeah.
What's in blue? No, I'm right. What's in blue or purple is the Australian dollar.
Okay.
And we had a secular bull market in commodities that started in around 2001, 2002,
That's
2003.
Correct. Right.
And I always look at the Aussie dollar, the Canadian dollar, as commodity currencies.
Why? That's a fact.
Because these countries are big commodity producers.
Right. Right.
And they're kind of implicitly backed by the reserves that they have in the ground. They make more tax revenues. There's better business going on when commodity prices are going up.
Right.
So we saw a huge rally in the Aussie dollar and the Canadian dollar through 2008, and then, of course, because of the financial crisis, we saw them collapse with all asset prices versus the U.S. dollar, as everyone ran to the U.S. dollar for safe haven and the bonds.
Yes.
And interest rates went lower. And then we saw, as commodity prices picked up again and interest rates stayed low, we saw a resurgence in these commodities, currencies.
In the context, folks, of what Andy's talking about, if we just stay with the Aussie dollar for a second, the Aussie dollar went up 100% against the U.S. dollar.
129% from low to high.
Right. Okay, go ahead.
Yeah, big move, man.
Huge
move.
Right.
Right. Now, on this monthly chart, we're seeing them come down.
Right.
And we're seeing commodity indexes come down. So the question I ask in the article, and it's more food for thought than a definitive opinion here, because time will tell us, are we now seeing the end of this cyclical bull market in commodities?
Okay.
Now, from my own perspective, I think it's a function of interest rates. If interest rates are kept low, I think we'll see certain commodities resurge. I also think that each commodity has its own individual fundamentals. So we're not going to see every commodity move, but the overall sector, there is a sector pull within commodities. And I think it's very interesting to once in a while take a very macro view and take a look at the whole the whole state of the market. And right now, the Aussie and the Canadian dollars are telling us it ain't that healthy.
No, listen, I think it has to do with my take on it, man, is King Dollar's really going. I mean, going up.
Right.
And commodities are priced in dollars, folks. And guess what? The strength of the U.S. is going up in a huge way. And technically it's set up, and fundamentally it's very easy to see. I mean, fundamentally you just have to look around the world, folks. I mean, there's huge problems. I mean, huge problems, not just like insane problems. Okay?
Absolutely. And also, Tom, fundamentally, you say it all the time, and I think it's the best way to look at it. where are you going to put your money? In U.S. bonds and get a 2% return, or are you going to put them in European bonds and get like a hair more or less? It's a no-brainer.
If you want to see how bizarre this is this morning, folks, okay, so picture this. So the 10-year right now is 2.3, our 10-year, right? Folks, Spain is 2.1.
That's insane.
It's like, oh, you're going to give your money to Spain for 2.1. The euro, basically, the euro is getting smoked beyond belief. The euro just went from 140 to 131. So you've lost you lost more than 2% on the currency. Never mind the 2% you're going to get in 10 years. I mean, it's amazing.
Absolutely. And I think that really the future of commodity prices as a sector depends heavily on the growth of the largest consumer in the world. Now, the numbers out of China are very disappointing this year, and consistently disappointing. And that is the reason that we're part of the reason we're seeing that. You can also say that the Aussie dollar is a function not only of commodity prices on the supply side, but also on the demand side, because their biggest customer is China.
Yeah.
And China is slowing. So that really is the key to the future in my mind. And also, Tom, the whole commodity business has changed dramatically in the last 12 months.
Yeah.
It's changed dramatically. It's going from, for a long time, the banks, after Glass-Steagall, were a major part, a major control of the commodity markets. Because of it, they've abandoned these markets, the U.S. banks. It goes back to traditional merchants. And these traditional commodity merchants today are better capitalized, bigger, and more aggressive than they ever have been in the past.
Well, it's going to be amazing. It's going to be amazing, folks, if this shakes out the way that many folks thought, that when the banks were so involved in the commodity chain, that the banks were continually keeping a bid at it, and basically there was collusion inside that market. And it's real possible that that's what we have, And once they got out,
it's even more so now, because who are the biggest players? You have Glencore. They're in Zug, Switzerland. They're not really under the guides of the U.S. regulators. You have Noble in Hong Kong and Singapore. You have companies like Mercuria, like Trafigura, European-based. It's a very interesting, and what they're doing now, it's not like when I worked at Philip Brothers. We traded commodities. We were middlemen.
Sure.
Now they're buying assets. Glencore bought Estrada. I mean, they're an 800-pound gorilla in coal, in nickel, in zinc, in all these metals. You're going to see this happen more and more, which means that they're going to control prices much more than they did in the past.
Yeah, that one gets interesting, too, because, you just stay there with us. We'll talk about that.
Sure.
Andy Heck, Tom O'Brien, we want to hear from you, folks. Our phone number is 877-927-6648. Give us a call, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, you get the Dow up 36, Nasdaq up 14, S&Ps are up 2.5. And what the Dow Industrials did do, folks, the Dow went up, tagged the high up here. The high that we're talking about is the high from the 17th of July, 17,151. You hit 17,153. We're not going to get the volume, that's for sure. That test would be, you need more than 700 million shares. The Dow is going to be lucky, NYSE is going to be lucky to do 500. We're talking with our man, Mr. Andy Hecht, and we're talking about commodities and the banking structure that can't basically trade the prop commodities anymore versus the larger companies that have basically taken over the commodity business. What's intriguing, Andy, where my head's going with this, right, so is that it seems to me, you know, like when you're talking about pricing power, right, that there's two different ways that you can have pricing power. Well, there's a lot more than two, but when I look at where the structure was, meaning the banks are dealing all their prop desk, and in fact, you know, we know Morgan Stanley had huge amounts of pipelines, tankers, and were trading it. Same with Goldman, okay? Same with Citigroup.
And aluminum warehouses and all kinds of infrastructure.
Right. Okay. Right. So now in that structure there, it seems to me what was happening, as long as they could keep putting bids up into it, what they would, if in fact this plays out this way, what was happening there is that they had the commodity, they were pricing it up, and it was the consumer that was getting hit on a continual basis, okay? If in fact this plays out this way, right? That's one way. Now, the way that it seems that it's going to play out now, and this gets really wild watching how this plays out, is that you have Glencore and you have these other large companies buying everything, right? And they're strictly, they're buying it, but they're buying it off to producers, right? So,
yeah, they're buying a lot of, listen, they're buying warehousing, they're buying pipeline, they're buying producers. And listen, when I worked for Philip Brothers, when we had big up years in commodities, we made a lot of money.
Right.
When we had down years, we had lean years. We didn't make a lot. What these companies are setting up, the way I look at it is, they're setting up during the big years, they're going to make a lot of money. During the lean years, they're going to stockpile some cash. They're going to go in and they're going to buy up whatever is marginal so that when the big years come back, they're going to make even more money, have even more control. And eventually, if they buy up enough properties, they dictate price.
So watch. But they're not there yet. And so what
they're not there yet.
So what they're doing now, though, watch what they're doing now. What they're doing now, because they do still control price, because they control the distribution, and they have nailed the price down from the producers, because all they have to do is either something has to be really expensive, folks, and you get it cheaper, or something's going to be really cheap, and you just sell it for more money. So when you were just explaining that, I says, oh, man, I says, hold it. They're so powerful, they can destroy the producer right now.
Absolutely. And you know what? They can trash the price to buy the asset.
Exactly. But see, that's going to take 3 or 4 years.
They're competing with someone else. They're competing with China, who's doing the same trade.
No, exactly.
Right.
Exactly. So the key is, folks, get a bigger backyard and stop putting all those commodities in that backyard.
Well, that means that on these dips, when things look lousy, do what they're doing. Step up, buy long-term assets, buy long-term, buy long-term, low-cost producing equities. Those are the kinds of things. They're either going to get taken over for nice multiples, or they're going to do very well when the cycle comes back. So it's a scale-down buy type of situation in a lot of commodities. But given the current state, it behooves them to have a bit of a bear run in commodities.
No, I agree. Well, listen, Z in the Den is talking about copper in China, and you know what's moving out here today? Now, I just finished the gold report, and I didn't buy the stock today, but what you do have, folks, is that a couple of these copper stocks are moving, like Southern Copper. It's moving out here, and it looks like a large ABC up, and it's like, oh, man, okay, you're going to move right now? If we actually go to the copper, let me go to the copper contract for a second. I didn't bite on this one this morning because we own so many equities right now.
Copper looked lousy today. I mean, by the way, copper is diverging. All of the other base metals are up today. Copper is the one that's down.
Yeah,
Copper's really not leading in that sector, which is very interesting.
Yeah, well, it is. It is. But when I know when those equities leave, when the Southern Copper leaves like that, it's like, oh, man, okay, this thing is getting some action, So it's going to be this. Yeah.
Hey, technically, Tom, copper held exactly where it should have, 308 a pound. Then it ran up to 323, coming off a little bit today, but the strength in the aluminum, the zinc, and it's very interesting because when other things were running up last year, the base metals were doing nothing.
Yeah.
So there's kind of a turnover here. Kind of a turnover. But I'm a little concerned for the next couple of months based on the action that I'm seeing in the Canadian and the Australian dollars and the strength of the U.S. dollar. Because at the end of the day, commodity prices are often a function. If there is a little weakness in the market, it's going to be exacerbated by a move higher in the dollar.
And, folks, if we go over and look at a long-term dollar, so picture, nothing goes up forever, nothing goes down forever. And you got to remember something. The dollar topped out at 120. That top was at 2001. It bottomed out in 2008. That was 70. We've been going sideways, okay? Building cars, though, since That's what, the 4, that's 6 years. Okay?
Absolutely.
And this is what ends up happening, folks, just so you can understand technically what happens here. It wants to wait to run to 85. I figure 85 we're going to see. If you get volume at 85, you're going to be at 89. If 89 gets broken and we can go topside and get into the 92, guess what? It will go back to 120.
That's right.
You know, so the setup is there.
And that will not be bullish for commodity price.
No, it won't. But
Right.
And that setup I just gave you there, folks, is definitely going to take 2, 3, 4 years or something. But I can see that setup in the cards also because of the politics across the world right now.
Right.
You know.
And Tom, if you bring this back to gold, gold has been acting as a currency. And by the way, gold in euro has been doing very nicely.
No, and that's my take is that gold's going to be a currency. And what it has to do with, folks, okay, all these political sensitive areas in the world, which are a lot, what has happened is that they're turning their money into dollars and gold. You know, even dollars more than gold, you know, because they know they can spend dollars on a very quick basis.
Right.
I suspect that gold is happening at the same time, but they're changing it. And like right now, what is it? It's Argentina. Argentina, I mean, these people are lining up, and it's legal in Argentina for 20% of your pay to get into dollars, folks. And unfortunately, they have to do the dollar through the government program, not through the black market. But every single Argentina out there is doing it. Well, guess what?
You have total currency devaluation there and hyperinflation.
Oh, yeah. And it's a lot, you know, you get it everywhere. So that's what's, you know.
It's just interesting. I mean, like I said at the beginning, sometimes it's good to take a step back and look at the markets from 30,000 feet and filter that into your daily technical or fundamental analysis and just keep it in the back of your mind and try to keep an eye on some of these things like the commodity currencies that sometimes give you a little clue.
It's a dynamite clue, no doubt. Well, listen, man, we appreciate all the feedback. You have a great one, a safe one, and we look forward to the show in an hour and 15 minutes right here at TFNN.
Thanks, Tom. Talk to you Thursday.
Man. Have a great one. Have a safe one.
You too.
Dow Industrials out here, folks. As we're looking at the Dow, it's going to be intriguing to see, you know, it backed off just slightly. No big deal. But it is going to be amazing if the market was waiting for the Dow to hit a high. The market's always waiting for something, folks. If I learned anything over the course of many years, I remember one time we were looking for a high or a low. I forget what one it was. But you need harmony in it. And it was like, it was just waiting for one more indice to basically touch that level. And it's a mind blower how they actually touch the levels, whether that level is 200, 100, or 17,000, okay? That's when it really gets bizarre in a huge way that they can go up there, they can touch it, and then that's it. The test is done, start backing off, and we go from there. Inside the XAU and the HUI out here today, what you do, if you are in those markets, folks, what we want to see is an additional day of strength. Today wasn't bad. It's a start. What you do want to see is an additional day of strength, though. I suspect we're going to get it. I like how that dollar traded out here today. I mean, it was down. It goes higher, but it looks like it's almost, it's going to be a little doji up there right now, second doji in a row. So it would make sense that you back down a little after the run that it's had because the dollar, you know, it's did exactly what it was supposed to do. And what we do have is that if you back down, you go sideways, we know we're going to have lighter volume. That would be a bullish move in a larger context of what we have out here. This is Tom O'Brien. This is TFNN. Right now, you got the Dow Industrials up 39, NASDAQ up 15, S&Ps are up 3.5. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now up 38. Nasdaq is up 14. S&Ps are up 3.5. Inside the takeover area today, you have Burger King is going to take over Tim Hortons. You got Warren Buffett is going to finance the deal with a 9% preferred loan. And so, the amazing part is that I just can't picture buying a donut chain. That's what it really comes down to, I guess. I suspect they're going to have to be selling more than donuts. I know Tim Hortons is a great name, no doubt, up in Canada. And, we'll see. I just don't see donuts as a growth business. That's what it really comes down to. What you did have out here this morning, though, which you could see, which was pretty amazing, watching on CNBC, was you've had all these inversions take place, and for some reason, because Buffett was involved, it was all of a sudden it was okay. So it was hilarious, the types of let's see, speech pattern that was going on that basis. Bottom line is that 9% preferred is a nice deal for Berkshire Hathaway owners, no doubt about that. We're going to take a look at the three Qs, the NDX 100. So the NDX 100 right now, we are at a 99.53, still at a high. Apple. So Apple had come out with a bunch of news out here today. So they are preparing a 12.9-inch screen. Apple suppliers are preparing to manufacture the company's largest ever iPad production, scheduled the first quarter of next year. The amazing part about that news blast, folks, was that, okay, hold it. You can't come out for the holiday season. They're going to have that at Christmas. Next after December, what good is that? You buy your stuff at Christmas. That's what it shoots down to. So we'll see how that whole thing does shoot out. We go take a look at the XLF, the financials. Right now, the financials are at 23.37, and your benchmark out there is 23.07. Would have to get back under the 23.07 mark. We take a look at Citigroup if you want to see how you just get slapped on the hand again. Well, Citigroup did it. Citigroup is trading at 52.50. They got fined $1.8 million by FINRA. Now, check this out, though, folks. This is how sick this is, meaning that, these banks are always complaining about regulation, but these regulators, this is tip money to them. Citigroup is going to pay $1.8 million fine and return more than $638,000 to customers after its security units failed to get the best prices for clients in, now check this out, this is the thing that's amazing, and 22,000 trades over more than 3 years. The Financial Industry Regulatory Authority said today. A Citigroup trading desk used manual pricing in non-convertible preferred securities that led the bank to provide customers with prices that were inferior to the national best bid and offer in 14,800 instances. If you don't think that Citigroup made more than $1.3 million and 22,000 trades, folks, okay, what is that? It's just, anyway, you get the gist of it. The bottom line is that it's the way that the structure continues to be set up, and you can see from the pines that get peeled out here, it's tip money. All of this is tip money. They'll get away with as much as they can get away with. They get caught. It's like, okay, 22,000 trades, 1.8 million. And what that, just so you can understand where that whole deal is, folks, okay, when you take a look at how they're pricing the product. Number one, that product itself is not like you're on exchange looking at a lot of different prices. The bottom line is that they have them on both sides. And I suspect the amount of money that was made is a lot more than the 1.8 million. That's where that baby is shaking out. We take a look at Walmart. Well, actually, let's go over to Walmart, because we had Best Buy came out with their numbers. Numbers weren't that great. Walmart right now is at 75. It hasn't been able to get over the downdraft from 75.92. We went into that last Friday, and we traded into it with $4 million versus downtown at $9 million. So what's happening there is that Walmart is building cars to get into this 72 area. And Walmart, folks, is going to be one of the most important equities if, in fact, it gets under that $70 level. The reason being is that it took 12 years to get over that level. That's going to be a huge heads up if it gets back under that level, because you can't bust them up. Guess what? It's going to try to bust them down. Well, let's go to ExxonMobil. ExxonMobil was up $1 today. That hasn't got any juice. It failed today, too. Okay, so now we're up 94 cents. Exxon had come down with 18 million. You're up with 7. It hasn't, and it couldn't hold this last swing point. The swing point that it hasn't been able to hold, folks, is just about a full month right now. In fact, yeah, this is pretty amazing. That yeah, it's the 26th. You know, so I got over the swing points out here today of 99.84. You went to 100.34, and we're going to close underneath it. This is a classic failure. You can actually learn a lot about the market in general and distribution and where selling takes place, folks, because, you know, Exxon had a nice little juice out here today. Went to $100.31. Whoever that seller is on the way down, that supply line is huge. And that supply line, folks, goes back to April 16th. So you got April 16th coming all the way over to July 31st. They're selling that supply line. And a large equity like ExxonMobil, okay, takes months to get out of. Months. You're talking about, let's see, you're talking about 4.2 billion shares that are outstanding. You know, it's not necessarily that you want, I'm not saying to sell it either, okay? Meaning, listen, I'm short the XLE in a different way on a leverage product, but the bottom line is that this wants to go lower, but if you're in it for a dividend, well, oil's always going to pay a good dividend. That's a 2.7 dividend out here. As we come into this close, it's going to get intriguing because the Dow itself, not that the Dow is a big deal, but it couldn't hold its high. What we will have, that'll be a test of the high, lighter volume, and yeah, it looks like we're going to do about 500 million versus 700. This is Tom O'Brien. This is TFNN. Right now, you got the Dow up 28, NASDAQ up 12, S&P's up 2.5, gold up 440. You get bonds. Bonds are holding. Bonds want higher price. 126 to the 10-year, 140.16 to 30. You stay right there, folks. We're going to be coming right back. Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This card's by Walter Anderson. Believe in something big. Your life is worth a noble motive. There's no doubt. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials close up 29, NASDAQ up 13, S&P's up 3.5. Gold contract up $4, traded at $1,282 an ounce. Now, we had what gold is this, folks. She had about 100,000 contracts, 97,000 contracts out here today. Trades up to $12.91. We're at 1282, and it's 1281.30. Back inside that area, which we just tucked ourselves back inside it, is saying that gold wants to once again make a run up to this 1347 area. So would have liked to see a little bit more volume in the baby today, but bottom line, you did get back inside it. I expect we're going to get up there and try to build some calls the next few days to get up to higher price. Silver. What we have happening in the silver market is this. Silver had volatility out here, got to price, and gave it up. The sweet thing with silver is that, yes, it was a rollover, no doubt. Bottom line, though, you pushed into 1973 with a nice expansion of volume. What does that say? It says it's going to be back up there. What we need with silver is we need silver to get back inside 1994. And 1994 was the low of the sign of strength from June 19th. Inside the metal market, folks, June 19th is your sign of strength. Oil. We're going to take a look at the oil market. What we have with oil is this. Oil looks like it's a monster ABC down. This is going to be really fun, folks. Reason being is that we're at 93, and it looks like 84 is in the cards. 84 would just be a mind-blower in oil. We haven't seen, let me just put a continuous contract up. We haven't seen 84, so if I put a continuous contract up, let's see the last time we've seen 84 oil. It's not that long ago, I guess. Well, yeah, June of 2012. June of 2012, we went down and hit those babies. We actually got to 77, and we got to, we got to 77. Let me pull up the unleaded gas for a second, because this gas is so sweet. Let me see how this gas. So right now, unleaded is at 276. Yeah, she's going to... Okay, so gas right now, we did 14,000 contracts out here. Yeah, that's good. That's cool. Okay, so 14,000 contracts going into 59,000. That could be a large ABC structure on the way down too. And if this is unleaded gas right now is at 276, and it looks like it's set up to go to 250. We have a question in the den. Danny's asking, how come gold didn't fail on price? Okay, so if we go over to the gold contract again, and we look at, see what he's talking about. Well, it didn't fail on price because it got inside the, well, gold did two different things, Danny. What it did, number one, is that it tested the June 19th lows, rejected them with lighter volume, and now it's back inside the range. Yeah. I mean, as long as you stay back inside that range, a rejection of failure on price would have to be at a swing point, not just going up and pulling back. Great question, though. Bonds. What do we got with the bond market? This is what you have with bonds. 10-year, 30-year, they refuse to back off. Right now, the 10-year went sideways today. 1.7 million contracts. We're at 126. The yield on the 10-year right now is 2.3. What that 2.3 gets you, folks, is a 30-year mortgage at basically 4%. 30-year right now is at 140.14. That wants to run up to the 142 area. The bond market is really strong, and in fact, if you look across the world, it's pretty amazing. And all you really have to do is use your common sense and say, rates are low. There's no two ways about that. They're low in an extraordinary way. But the rates across the rest of the world are lower. And it's like you really want to lend money to a couple of these countries that are broke. Well, bottom line is that people are lending money to them, and they're lending money at a less expensive rate. King dollar. What looks like to me right now, and this is where the metal market should get a little breather, is that King dollar looks like it just finished the smaller ABC structure on the way up. We'll see whether it wants to go sideways, pull back slightly before its next move up. Right now we're at 82.68, and what you had out here today, still higher high today. Volume kind of died off a bit, so it's going to be intriguing to see can, in fact, it climb higher without a pullback. Dow Industrial. So what we had is the Dow tested its high out here today. Did it on dramatically lighter volume. We did it on 490 million versus 702 million. The Dow got to 17,153, tagged the 17,151 high from the 17th, and basically gave it up. We'll see if, in fact, it wants to do another test this week before coming back downtown. This is an absolute classic technically, and when I say a classic technically, what you have is this, folks, okay? If we take a look at, I'll put this, first I'm going to put this on a weekly basis so you can see what I'm looking at. You put this on a weekly basis and you want to do one of our man, Mr. Bud Rolf's channel lines, you're going to see that it is an absolute classic. And the classic being that if you take the bottom of the channel, and that bottom of that channel would be 14,700, it goes all the way up. It breaks with conviction in August. I mean, fast, furious. Dow goes from 17,056 down to the 16,494 and just comes back up and just tags the line. The trend line actually didn't make it, but the top of the trend line is 17,209, And I love these channels. The reason I like the channels is that you can do two different things with them. You're looking at a horizontal test, and it failed, and then you look at a vertical test, and that also failed. So the vertical test failed in spades, too, by the way, because what you do is you take a look at how it broke the channel versus how it came back up into it. So it's going to be amazing if, in fact, the NDX 100 or the NASDAQ was waiting for the Dow to get up there and retest. We go over to the small caps, and this divergence, there's no doubt. You go over to the small caps. Small caps were up $9 today. If we take a look at the IWM, use the iShares for that correlation, it's just up to ICE. That's ICE is basically set up. Well, it's a close call, actually. No, it's 116, so it's over ICE. 116.05 was ICE early. So you're over ICE. You did it on 34 million versus 50 million. The NASDAQ composite, you had the composite up $14 out here, 1328. Volume low in the composite, 1.4 billion versus 1.3. The composite should be banging out about 2.5 billion. The NDX 100, the 3Qs, what we had with the 3Qs, 19 million shares. Yesterday you did 24 million. 3Qs should be doing 50 or 60 million. They came down with 60 million. So I suspect what we're going to see the rest of this week, folks, particularly because I couldn't get any juice today. Friday, in fact, let me just see if this was... Okay, no. So yesterday was the lowest trading volume day thus far, 493 million. Today, we're at 512 right now. But what that's going to do, I suspect Friday's going to be very low. We'll see if, in fact, this is going to be the lowest week volume-wise as we're at highs. And, in fact, the benchmark, when you're looking for a high that wants to go higher or a failure of that high, your benchmark on the S&Ps go like this, the cash S&P. It's 1994.76. That was the high of last week. That's one benchmark. The larger benchmark is 1991.39. If you close under either the 94 or the 91, I expect the light volume's going to be lighter. That'll set up a run back down to the 1904 level in the S&P. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We have the Dow that finished up 29, NASDAQ up 13, S&P's up 3.5. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials finished up 29, NASDAQ up 13, S&P's up 3.5. And as we do each and every Tuesday at 20 past the second hour, we have our man, Mr. Basil Chapman. And don't forget, folks, each and every trading day at TFNN, we have live programming starting at 8 o'clock in the morning, 8 to 6. You can get all that programming right on your cell phone, TFNN.MOBI. If you want to get Tiger TV, in your browser, just put TFNN.com. You'll see on the right-hand side, hit that TV. You can get the audio plus the video. Basil is on each and every trading day, 11 to 12 Eastern Standard Time. He also has an outstanding newsletter. You can test that, drive that, coming over to TFNN, go to newsletters, trading newsletters to the opening call, test drive it 2 weeks absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
Very good. Thank you.
Cool, man. So it looks like we get the Dow up here, right?
Yes, I've got the Dow up, and what I show my subscribers every day is how the Dow is, the daily chart is working within the Chapman Wave methodology. And what we're looking at here from the stochastic and the MACD, these two green and red moving average tools over at the bottom, you can see that they are actually very strong. And we've gone to a leg C, and what we've been looking at is that there would be a left side, right side price time movement from the bottom at 16,333 on the 8th of August, 8th of July. Oh, wait, is that August or July? Time's flying. That was the 7th of August. I wrote it incorrectly. And from the 17th of July, the high of 17,151. So we've made a V-shaped pattern. We're into the resistance area here. This is pretty strong resistance resistance. Now you can see there's a trend line, that pink line, trend line resistance. And one of the things that I'm looking at, and what I had shown my subscribers last week, was that there was a price projection that said this area here, up to about 17,200, that would be a target to the upside. But as long as we're in leg C, in the Chapman wave, what we look for is the lowest, most obvious low bar, and merely count each successively higher peak to get to at least the fourth highest peak, which is peak D. So we see, and I'm still expecting that there will be a D to come. So far, I don't have a sell signal yet, but we're getting real close to a strong resistance. One of the things I'm looking at here, excuse me, is that within the Dow, when you're in a buy mode, the retracement should be no longer than 1 to 3 sessions. So we've got peak A at 16,627, and that occurred on the 11th. One day, pulls back, little doji candle, breaks out, makes a new recovery high, and that continues all the way to leg B at 17,074, and that occurred on the that was on the 21st of August. Pulls back for one session, breaks out. Now we've had 2 sessions to the upside. This is where you start to expect that you're going to take a little longer for the retracement. So tomorrow is a very important day for a number of reasons, and one of them is that I'm just going to move to another chart here. Well, this is a chart of Facebook, which we happen to have. I was going to discuss, but I just wanted to show the QQQ. This is the Power Shares QQQ Trust Series.
Yes.
It's only made a peak B, and the stochastic's holding at 96.64%. That is very strong.
Now, you're talking about in the daily, right?
And this is the daily,
okay.
Yes. Now, what's happened, of course, is the weekly chart in the NASDAQ has been the best out of all the indexes. That's held the very best. And that is in leg F/C in the weekly chart, and the monthly chart has made a new recovery high, and that is still moving above the 9-period moving average. So far, I don't have any signals at all. What I am anticipating is that we will get leg C maybe tomorrow above 99.68 in the QQQ series, and then everything's lined up. And then the soonest we can get a peak D in the QQQ is with Friday being leg D and then Monday being turned down. So I'm just trying to be patient, holding off, looking at different stocks. We are long different positions, working quite nicely. One of them is a stock that I discussed with you before, Facebook, which I said I'm anticipating that we should get 4 legs to the upside. Now, it's been one of the mildest rallies from the 71.55 low that it made back on the 6th of August. Now we're starting leg D. There's a price-time movement that takes it to about the 29th of August. That kind of corresponds a little bit to where the Dow is on that left side, right side price-time match. So I'm looking at a number of aspects, and I'm saying if Facebook goes to 76.75, then all of a sudden, FB is the symbol. You're looking at leg D in the weekly chart, and now we finally got a bunch of the little ducks in order, and it says now we could start to look for some kind of a pullback. And at this particular point, my eye says that this pullback could turn into something more severe, but you unless you get real bad news.
Are you saying for Facebook?
No, I'm talking about the overall market.
I see.
With Facebook being one of the former leaders, it's acting okay now. It's really not a leader, but it's telling me that if it just squeaks to a leg D in the weekly chart, at that point I've got to be prepared that it's going to start coming down. We'll have to take some action as far as subscribers are concerned. So what I wanted to show you here is that when I look at the VIX index, and to me this is really important, the VIX is just for the first time since it pulled back. It made a peak D at 17.57 in the daily chart. This is the CBOE volatility index. And what's happened is it pulled back and it made a low of 11.24 yesterday. And even with the new high today, in the market, the VIX held, and the low today was 11.33. That by itself isn't good enough, but it says that at this particular point, between 11.30 and maybe 10.90, 10.80, that is where I've got to really take note of what the VIX is doing. Is it starting to form a stronger base? And the moment if it starts to rally and gets above 12.62 into the 13s, I think that's the tip-off to say, okay, now we can start having some kind of a pullback. I'm actually giving a talk tomorrow night. I've got some of the information right here. This is the 11th anniversary meeting of the Boston Investors Group.
Isn't that cool?
Yeah, this is, time flies, 11 years.
It does.
This is over at MIT, and I've got the information. It's Building E51, Room 315, 70 Memorial Drive, Cambridge, Mass. Starts at 7, so the first hour we'll have a party if anyone wants to come. There's no charge, but if they do bring a little snack or something,
let's go through this. This is tomorrow night, Basil, right?
Tomorrow night, Wednesday night, the 27th.
At 7 p.m. Okay.
7 p.m.
So, folks, the address is 70 Memorial Drive. It's building E51, and it's room 315. And as you're coming down, when you're coming off the river, folks, it's not that tough to find, but you're going to see it just on the right-hand side.
Actually, I've got it here. It's the corner of, it's not on Memorial Drive, the building
right,
is, but the actual entrance is on the other side between Wadsworth and Amherst Street.
Right.
It's really quite easy to get to. Just don't make a mistake, because you'll end up in on O'Brien Expressway, right?
Yeah.
That's so I'm looking forward to it, because what happens is, you get, when you have something like this, people, especially since there are people that do technical analysis, a lot of people are Investors Business Daily subscribers, and they do a lot of work with Investors Business Daily meetups. But at the same time, they come up with questions that I don't often get, and I have to answer them in a different way. I try to do it technically as well as to do it with some of the fundamentals that I know. And it could be a cross-section of all sorts of things, interest rates, gold, whatever. So it's going to be fabulous. I'm really looking forward to it.
Yeah, they want to hear you play some music too, Basil.
Yeah, that would be nice.
Listen, man, you have a great night, safe night. We look forward to the show tomorrow.
Thank you, Tom. Have a great evening.
Stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You had Big Blue close up $1.83. Honeywell was down 30 cents. You had Walmart off 17. 3M was down 10. You had Exxon, the Mobil, up 89. American Express was off 44. We go over to the FTSE 100 in Europe. We take a look at the FTSE. The FTSE had been closed yesterday. Made it up today. Up 47 bucks. We're at 68.22. That swing point out there is 68.33. I suspect it's going to go for it. It stopped right at that 68.27 out here today. The DAX in Germany, we take a look at Germany. Germany today went up 78 bucks. We're at 95.88. And ICE, where the first time we'll hit any type of heavy resistance is 95.82. So we're at 95.88 right now. You're $6 over it. We came into that with, looks like about 53 million shares versus 131. So we'll see whether it can handle a higher price out there tomorrow. The DAX had already come down over 1,000 points, which was over 10%. Went straight down, too. The last time that when our retracement was taking place. We look at the DIA, the diamonds, inside the context of the Dow Industrials. The Dow Industrials had hit the high, did it with lighter volume. If you want to see that correlation inside the diamonds, it's pretty dramatic. The diamonds had done 6.1 million shares on the 17th of July. That price point was 171.32. We hit 171.35 today with 3.5 million. So this is going to be really cool watching how this shakes out. That's a clean test. Get over the high, close underneath it. In this particular case, we had just about almost 40%, almost 50% lighter volume. So when that happens, what you look for next is follow through on the downside. And what we would need, now this is where it's going to get intriguing this week. What I would rather actually see is just some kind of a sideways movement that can't handle it. The reason being is that if we pull back, guess what? The volume's going to be lighter also. There's going to be no volume this week. We had, yesterday was light volume, today was light volume, and particularly that is telling me that you have a huge amount of folks that were on vacation, which totally makes sense, by the way, because what you do have, depending where you are living, most folks in the Northeast, all the children are going to go back to school the Thursday or the day after Labor Day, I believe, or the Thursday after Labor Day. I forget which one it is. But the bottom line, they'll be back to school next week. Many other places, all the kids in Florida are already back to school. So we've already started the fall season down here. But what you do have is that the bulk of it, that folks that are working, whether it's on Wall Street or in the business in general, that new year starts next year. Because what's so wild, folks, okay, is that, and I've always looked at it like this too, is that it seems to me that Labor Day, after Labor Day, that's the start of the new year. And that, I guess that has to do with you've been through the summer, having a good time. Now you're down and you're into it, and you basically want to get a lot of things done. So this week, you can expect lighter volume going right through the week. Next week, on Tuesday, you can still have light volume. People still coming back. Wednesday, Thursday, and Friday, though, you're going to have some juice. We do have at the end of this week, the beginning of next week, of course, is window dressing. I don't see a lot of window dressing that's going to be happening out here. What you do have also is this, is that the way that the option expiration is set up these two coming months, you have we had a fast one in August, and September, it's going to be, actually October, it's going to be pushed out for a bit. It's just the way that it is kind of set up at this particular point. So it's going to be intriguing to see how much is laid on in option expiration in October. The reason being, of course, is that the market in general, when it goes south and goes south in a decent way, is normally September. And it will make its lows in October. Folks seem to always remember October because they're so dramatic in a low way. But most of the time, if you're making your lows in September, or you're doing a downdraft in September, you're coming down in October, it's already changed, starts moving by topside after it's making a decent low in October. So we'll see how that whole thing does shake out. Inside the gold market out here today, we had the XAU, the HUI. They got some decent juice going higher. The XAU right now is at 100.21. It stayed inside its higher range. So the way that's set up is that now it hasn't really broken its downtrend. We've been in this same trading range since June 19th. So you had these nice expansions topside. What both of them are trying to do is try to take out their March 16th highs, March 14th highs. So it went sideways. It did everything. The XAU and the HUI did everything that it is saying that it wants to go to higher price. It pulled back into the June 19th day of strength, did it with lighter volume, got out of it, because yesterday it was teetering, and it was so close yesterday. Because what I didn't want it to do is actually go after that swing point, because, see, what you have in the XAU and the HUI right now is this, folks. Because we came so far off the bottom so fast in May, and the XAU went from $83 just straight up to 106. Then you pull back, and you did this consolidation around 97. If the XAU breaks like the 95, it's like, man, you break that 95 and it's trouble. You're going to be down to 85. You go to and it held it. That's my point. You go over to the HUI, and the same thing was set up there. The Gold Bugs Index went from 201 straight up to 251. As it consolidated out, what it did, it consolidated out at the 231 level. Takes off again. Depending on if you own gold or silver equities, June 19th is your benchmark. And what you do want, what you hope that happened with the equities that you own is, and it happened with a few of them, but not all of them, is that it filled the gap from that June 19th area, June 18th to be specific. A few of these, we got a little divergence in them. They didn't fill the full gap from the 18th, and that's always something that you got to be aware of. You know, we can run up the other side again, but when those gaps are open below, they can get problematic once they start heading for those gaps again, because they turn into magnets. They pull them right down. And, you know, if you get a gap that's open 40, 50, 60 cents, keep your eye on it, because that certainly can get tested once again. Let's go to Frank in Lexington. Hey, Frank, what's going on?
Hey, how are you, Tom?
I'm doing great, man. You having a good day out there?
Yeah, very good, thank you.
So what's the weather like right now? Is it beautiful?
Yeah, it's beautiful. It's warming up this week. It was cool last week. It was really nice.
I heard, yeah.
80s, maybe touch 90 this week, and then it's going to cool off again.
Okay, cool.
Yeah, we like it.
I like it. What are we going to look at?
Franco, Nevada.
Yeah, FNV, okay.
You familiar with that one?
I am. Let's take a look. So Franco, Nevada, folks, it first off, was one of the first royalty companies out there, period, even before Royal Gold. The low is 36, the high is 61. They have all of 20 employees, and they take in, let's see, $421 million. Yeah, it's a beauty. Now,
it's like Royal Gold.
Royal Gold is the same type of setup. They have 21 employees. They're taking in like 265 or something.
Yeah.
What you have here, though, this is what's going on here. This is what's really wild. So Royal Gold and Franco, Nevada, they held up when gold was coming down, and they held up really well until last Thursday. And it's like, man, why did the volume come out? And it come out of both of them.
Yeah.
So I wouldn't bite on this yet. And when I was doing the gold report today, Frank, I looked, I said, you know what? This is one of the divergences that are out here, folks. I like the larger context right now of what gold and silver did, particularly gold, because silver has to get back inside the higher range. I don't like how Franco, Nevada and Royal Gold is like, man, you come down too hard. You get this gap. They both have the gap left over from the 18th. In this case, this gap is $52.02. And last week we came down to 54. You know, now, if we get down to that 52.02 it is.
Yeah.
And you have lighter volume, yeah, I'd buy it, because, you know, that wants higher price. If we go over to Royal Gold, and I'll just show you the same setup, and it's so weird, is that I suspect, folks, what you have is this, is that the same operator owns both of these stocks, because they've traded way too much alike on last Thursday, which was the 21st. They both come down with volume, so that's saying, hey, someone just got out of both of them. With Royal Gold, you're at 75, 72. The top of that gap is 69.80, and that is a danger point there. There's no doubt, man.
Hey, thanks very much.
Okay, Frank, have a great one, man. Have a safe one. This is TFN. This is Tom O'Brien. You stay right there, folks. We're coming right back. Dow Industrials finished up 29. Nasdaq up 13. S&P's up 3.5. We're gonna be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. We had the Dow Industrials finish up 29, NASDAQ up 13, S&P's up 3.5, and you just heard our man, Mr. Andy Hecht, going to be coming up next, growling a problem with you out here, folks, from 5 to 6 Eastern Standard Time. And inside that commodity market out here today, you had the copper was down 0.8%. You had, let's see, heating oil was up 0.2. Gold was up 0.3. Crude was up 0.6. Gasoline was up 0.6. Sugar was up 2%, actually. Oil, though, what we have happening right now, folks, which is just going to be dynamite in the context of what type of bills you're going to have this coming year. If you're up in the Northeast or in the Midwest, then you basically have to heat your houses, it looks to me, if we bring up this heating oil, and of course this is the diesel also, you're at $2.84 on this baby right now. This also looks to be a very large ABC structure on the way down, and it's a beauty too. You know, you go up to the high, which is a 308. We get down to the low, which is the 284. So we got 16. You got you get 25, but you get 25. So that would bring that down to 260. Let me pull this up. HO. I'll put this on a continuous. That is saying that the diesel wants to get down to 260. Unleaded wants to get down to 250. If I put this on a continuous basis, yeah, it's game. So check this out. This is nice going into the winter for all you folks that are going to need some heating oil. So we've gone sideways in the oil market, in the heating oil market, since February of 2011. Yeah, your high basically out there is 333. Your low is down at that 251. We're going to go after 251. That's the way this is shaking out right now. Your next level is the 272, 10 cents. Then you get that little bottom that got put in there in June of 2012. You break that, and then you're really going to get some relief. You break that, you get down to 222. So coming into the winter up there, I think you folks are going to be saving some money. And what does happen, folks, depending if you've ever lived in a cold climate with huge oil tanks, there's no doubt before I even traded, I remember as a kid, bottom line is that you'd always try to gauge that oil tank in the winter because it's expensive. And it wasn't expensive then, but it was still expensive in the context of what you were making. And the bottom line is that you're talking about 250 or 500 gallons at a time. So that's really important as to the bills that are coming in the next few months. Gasoline, we're going to save a fortune on. I really feel like we're going to save a fortune on gasoline. The unleaded gasoline right now is $2.76. It looks like $2.50 is on the horizon. But don't forget, you stay right there because our man, Mr. Andy Heck's going to be coming up next, growling and prowling with you. And you can test drive Andy's newsletter by coming over to our website at TFNN. Go to newsletters, go to trading newsletters, you get the Technomental Commodity Report right there. Coming into the market tomorrow morning, well, here, actually, let's go. We'll do Asia. If we go to Hang Seng, you go over to Asia. Asia last night was a flat market, down 92 bucks. We are at 25,074. Asia is going to be, the benchmark in Asia is 24,912. So I suspect it's going to try to get underneath that tonight. Now, if that's what we get out of Asia, that's going to get intriguing. Why? Because Asia has been trying to break this level, and it's been trying to break the higher level of this 25,000 since November of 2010. You know, it hasn't been able to do it. And what it did do is that last month it did push up with some volume. So 24,912, which is, you know, only $100 less than this. You get back underneath that, that would be saying that, guess what? You had another failure after you built cars to get into higher price. The Nikkei in Japan, what we have in Japan, Nikkei right now is at 15,521. And the way the Nikkei is set up right now, she also looks like she wants to pull back a bit. And the Nikkei is an indice when we do get a large pullback, folks, that you still want to be all over. The reason being is that the yen is, you know, Andy and I were talking about currencies in Canada and Australia when he did the update. The yen is right at 104. 104 yen dollars to $1 US. Guess what? That yen, folks, wants to get up to 124, wants to get up to 133. The yen is dramatically getting a lot less expensive, weaker in the context of where it has been in the last 35 years. And what that brings together is that our dollar is getting very strong. I suspect we're going to build some cars, but the dollar wants to go a lot higher. And it's going to be king dollar. And it's going to be king dollar right across continents. It's going to be king dollar across Asia, king dollar across Europe, king dollar across the South America. The euro is one way, straight down. The euro has already gone straight down from 136 to 131, and I suspect we'll probably go sideways a bit. But the next stop on the euro, the next test here will be the 117 to 118 area. I suspect that's going to take a couple months. Not going to be overnight. That area down there, though, we break that area, oh, baby, then you're going to see some real damage in the euro. And that's the technical setup. The fundamental setup just totally makes sense. What's blowing my mind, there's no doubt in everyone else's mind simultaneously, is that how are folks lending money to those sovereign countries over there at less than our bonds are going for. And specifically, Spain is at 2.1 right now. We're at 2.3 for the 10-year. Italy is at 2.4. It's like, oh, really? Italy's at 2.4. Spain's at 2.1. And so in that context, you can see why our bonds are going to continue going down. Yield is going to go down. Bonds are going to go up. So all you have to do out there, folks, is figure out how you're going to get some cheap money, number one. What are you going to do with it to make double or triple of what that is costing you? Because that is the essence of it. Because this won't last forever, but I do expect you're going to see this another 2, 3, 4 years. It's going to last longer than any of us expect it to last. The asset value, though, that you're getting, make sure that the asset value is throwing off cash. That's the real key if you're going out into the marketplace and you're looking at cheap money. Just take that cheap money, make sure the cash flow is positive. If you get the cash flow positive, it won't matter in the ups and downs of the economy. This is Tom O'Brien. This is TFNN. You stay right there, folks. The man, Mr. Andy Heck's going to be coming right up. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night. Safe night. Stay right here. Andy's coming up right next. Go get him, folks.